Good afternoon to all. And at the outset, I would like to tell that this IMS session has been created with the intention to just bring an understanding to what the module holds, what are the issues that could arise from it, and also some possible representations that we may need to do either as a consultant or as the industry or as a taxpayer themselves. Whichever questions that you have, please do put them up in the chat box. I would attempt to take during the session. If something is covered at a later point of time within the same session, I will then defer it to the end of the session. So first and foremost, why has the IMS come into picture? One of the main reasons of IMS coming into picture is that the department now wants to understand what is the credit that you are taking. Till date in GSTR 3B, when the returns were being filed, we had GSTR 1 providing the invoice level details of outward supplies, but there were no invoice level details being posted by a taxpayer with respect to the input tax credit. So keeping this in mind, this was one of the main intentions. Second thing is to ensure that credit, whichever is being claimed, and whatever credit is supposed to be reversed, is being done so at both the ends and not only by the supplier. Now, this they have brought in significantly due to the Rajasthan High Court HUL decision, where they mentioned that the government, the CBIC, is supposed to come out with a mechanism for such matching of credit to ensure that the recipient is reducing his credit and then only allow the supplier to reduce his liability. To this end, Circular 212 was brought into the GST law, where they have said that you need to provide a CA certificate for matching of this, and it was also clarified in that circular that this may apply even for the past period. I am not going to get into the legality of that circular. Till date, we have not seen any specific notice from the department enforcing Circular 212, probably because they are aware that IMS is going to come into picture. So in this document, all the IMS related links I have provided. Generally, till date, all the IMS related information was through advisories and FAQs. Recently, of course, we have the finance bill which came out, which is proposing to modify the GST law and subsequently also the GST rules. Let us understand what they are making as a change in the GST law. First and foremost, in section 38, they are providing this legal framework, and generation of form GSTR 2B was originally available. They have now changed it from statement to auto-generated statement to allow for the IMS module. The major change has come in section 34, where they have brought in the concept of incidence of tax which is being passed. This is the provision where they have mentioned that a person is allowed to modify his liability only once the point here which we need to understand. They have mentioned where tax incidence not passed. In that situation, it would not apply. So we need to carefully analyze these situations where the tax incidence is not passed. Do we still need to follow the IMS approach? Does the IMS provide the utility to differentiate the scenarios where tax incidence is passed on and where tax incidence is not passed on? Presently, I do not see any such facility or functionality within the IMS, but ideally this is one of the representation items. Rule 67B is supposed to be also be modified to enable the adjustment of the supplier credit note. And 39 also is to be amended to the extent that the 3B will be filed only after form 2B is made available on the portal. So to this extent also they will make IMS linked to the GSTR 2B. So this is from the legal basis, and as of date, finance bill is still intact. It is still to receive the president assent, and going forward, the notification must come out which enforces these clauses of the Finance Act, and subsequent to that, the GST rules must also be notified by way of a notification. So there are 2-3 more steps pending for IMS to be made valid and legal presently. As we all are aware, the GST portal has already implemented the IMS functionality. So this is one of the biggest representation points, because we have seen many taxpayers who are already facing the heat of IMS being made live. Many people have portal is going over and above the law. There is no option that the portal or the rules or the circulars can go over and above the lawmaking authority. In this situation, we need to be very clear. Whoever have faced difficulties must take corrective actions first in their returns. If they are going to receive any automated notices, they have to respond to them accordingly. They have to make representations. They have to respond in, even if it is in a suo motu manner, to their jurisdictional officers of the issue they are facing with the legal backing. So this is the portal which shows with respect to inward supplies, wherein this is the point of view from the view of the recipient, and this is the sheet which will be displayed once you enter into the IMS module, where you have the various invoices, debit notes, credit notes, and their amendments, and with the consolidated summary of the actions which are taken on it, and even those where no action is taken. As all of you are aware, wherever there is no action which is being taken, it is deemed accepted in the IMS module. So presently, the clear suggestion would be, until IMS module is made applicable in the law, you can always go for the view that you do not take any action in IMS. So that will lead to all the documents being deemed accepted, and then you follow the ITC bifurcation as you would in the GSTR 2B. Once you go to GSTR 2B, there you have all your details which will flow through, which will then go into your 4A5 all other ITC. Either it would be import of goods, import of services, and it could also come under your permanent or temporary ITC reversals. Please keep in mind, IMS does not change the reporting mechanism of GSTR 3B. You would still have to disclose permanent ineligible ITC. You would still have to disclose temporary ITC reversals. And wherever you are parking credit in 4B2, that is your temporary reversals, when you are reclaiming them, at that time you would also have to disclose in 4D1 to ensure your electronic credit reclaim and reversal statement is matching. There again, of course, ECRRS statement which has come into the GST portal again does not have a legal backing. If you do receive a notice that your ECRRS statement is negative, this is something which then we'll have to see how we can dispute it legally. But from the point of view of the department, this statement only gives them a via media to understand whether you are claiming any excess credits, or it would mean that you are making incorrect disclosures. Either way, this would not be in favor of the taxpayers. Therefore, having a tracking and clarity of what ECRRS is and how the disclosures are being made in the GSTR 3B also is important. So in this sheet in the IMS GST portal, you will get invoice level details of all the supplies which you have received, and actions can be taken against the same. Action taken can be changed even after you take the action, but not be changed once you compute and file your GSTR 3B. So please keep in mind, before you file GSTR 3B, recheck on actions taken, especially those which are reject and pending. You do not need to specifically take action on the accepted invoices, because if you do not take any action, it is deemed accepted. So to that extent, your job is reduced. Take action only on that which you want to reject and keep pending. Please keep in mind, whenever I'm telling take action on reject and keep pending, I mean once the IMS is legally valid and available in the portal. Now presently it's only available in the portal, but on legal basis, I do not accept that it is legally enforceable, and therefore I do not need to take any action, because whatever actions I take of reject especially impact my suppliers in certain cases. Coming to the outward side of it, now we have IMS GST portal outward. This is the view which is available to the supplier. That means a person who has uploaded B2B invoices or a credit note, and recipient has taken some action, is either accepted, rejected, or kept pending. In these situations, those invoices or those credit notes, the action taken will display in this uh, outward slide of the IMS module. And this is how the display will be in the GST portal. First and foremost, if you see the two headings, there it gives a total list of your B2B supplies, and one more, which is rejected records, where liability added back in GSTR 3B. So this is something which is very important, and this can be viewed directly. Please keep in mind, this outward supplies dashboard is specifically for view option only. No action can be taken on these records here. And they've also given a download functionality for more than 500 count of documents. This download functionality has not yet been enabled. So I checked it 2 days back, it was still not enabled, but this of course should come in the near future. One more reason why I feel it cannot be made legally enforceable, because the entire IMS module is not functional. This is the way the outward supplies dashboard will look, with the actions which will be also taken will be also available on the right side. I think after the integrated tax, action taken also will be provided. So now we'll come to what is the IMS. There is one very important aspect in either of the cases, whether it's accept, reject, or pending. If you see the rightmost column, the supplier liability, which is provided in the green column, that is full amount. So this means to say that if action taken by the recipient in the action on original record column, that is action taken by recipient, if we accept it, he will get the ITC amount. Plus, please keep in mind, when we say he will get the ITC amount, this amount will flow into the GSTR 2B. After that, whether this invoice is in relation to my outward supplies, is it related to my exempt outward supply, is it related to overhead expenses which are personal in nature, is it related to any expenses which is blocked credits under the GST law, I am not talking about any of these scenarios. This is a situation where the document itself is moving only to 2B. After that, the action which you need to take on any of these scenarios would have to be seen independently once you are filing the GSTR 3B. So this means that there is an addition in the activity which is required before filing the GSTR 3B. So one question which will arise is, when is the IMS active or live in the GST return period? Is it only that after the GSTR 3B or GSTR 1 due date I am supposed to take action? When is the action supposed to be taken in the IMS? So in the portal, you are allowed to take action on a real-time basis. That means let us take the date to be 10th March. And if a person has filed his invoice for his supplies, it will appear in your IMS module as on that date. Action can be taken by the recipient on a real-time basis. But assume that the supplier going forward, before he files the GSTR 1 of March, he amends that record or he removes that record and adds again the same record, but he does it through the offline portal. This is a very common activity to ensure that all the books related invoices are displayed irrespective of whether e-invoice is raised or not. So to this extent, whatever action was taken will be reset. He will have to take the action again. So ideally, it is better to take action on the IMS after the GSTR 1 due date, not before that, because whatever actions taken may be reset and there is no mechanism to track these resets in the system present. Coming to our next situation, which is in relation to rejecting an original record. Whenever a recipient rejects the original record, such ITC will not flow to his GSTR 2B. Please be very clear. This means that you do not have an option to disclose such an item in permanent ineligible ITC. So what is the utility of the reject function in the IMS module? This reject function is mainly to reject those invoices which do not pertain to you at all. Therefore, if there is any person who is doing a fraud transaction, simply he's got your GST number, he's putting your GST number and filing the return. He is doing some kind of clandestine removals. You have no link to these suppliers. In the past, department used to tell he supplied to you, you are part of the chain, and then they used to approach you as a recipient. Now you have an option to reject such invoices and you would not have any link to this document at all. But let us come to a situation of block credit. A insurance company has raised the invoice for group health insurance for your entity. This is a valid expense. You have documented and also paid the amount to the insurance vendor. At that time, you need to accept such an invoice because it is your legal document, and then in the GSTR 3B, you would need to disclose it under the permanent ITC reversal. So therefore, rejecting an original invoice is suggested only when it is not related to you at all. Do not reject an invoice without a valid reason. Presently, does the system have an option to modify action taken? I do not see any option that once rejected, once you file the 3B, then you realize I made a mistake. I need to change the action taken in the past month. I do not see any option to negate that presently. So this is again another representation point. Last point is keeping it pending. Wherever you are not clear, especially where section 16 conditions are not fulfilled, that is, you have not received the goods, you have not received the invoice, you can decide to keep those invoices pending. Wherever there is some ambiguity in the details or in the values, keep these kind of documents pending. Avoid using the reject function. Always use the concept of keeping pending to the extent it is available. In all these situations, the liability of the supplier does not change. Even if you reject this invoice, the liability of the supplier would not change, because in the eyes of the department, the supply has taken place and you are not taking the credit for this transaction. Next, we have the B2B amendment or debit note upward amendment. In these scenarios also, it follows the same concept of accept, reject, and keeping pending. All the options are available. If you are seeing this document, there is one very important thing to understand. The left column, which is accept, reject, pending, which is in gray, that is the action taken on the original record. The column to the right of the yellow columns is the action taken on the amendment record. So when we are seeing B2B8 and the debit note upward, the accept, reject, pending of such record is in the third column, and the left column, which is in the gray column, that is the original record action which was taken. So to this extent, whenever there's an upward liability, the liability of the supplier, if you see plus delta, the differential amount will always arise. And in the amendment record, wherever it was rejected or kept pending originally and later on accepted, the full amount will flow into his GSTR 2B. And the liability of the supplier still remains delta because in the original record, the amount was already paid. Next, we are coming to the action which is taken on the downward amendments, B2B and debit note downward amendment. So let's understand one thing. Anytime there is a reduction of liability from the supplier's end, there is a possibility that the liability gets added back. So please keep this as a thumb rule in mind. Whenever there is a reduction of liability by a supplier, there is always a possibility that such liability is added back. So this is one scenario where original invoice was accepted, full credit was taken by the recipient. Let us assume in this case, the value is 100 and the amendment is 20 rupees. So net value here is 80 rupees. To this extent, where the amendment was accepted, it will be minus delta. That means minus 20 will display in the GSTR 2B of the recipient, and even minus 20 will be allowed for the supplier. But in the case the original invoice was accepted, that means 100 rupees credit was taken, and subsequently the downward amendment or the adjustment was not accepted, it was rejected by the recipient. In that situation, the supplier's liability is added back in the next month. So this is one of the instances of liability being added back. And when this liability is being added back, there is no option to go for a pending option. This pending will be blocked for B2B downward amendment when original invoice is accepted. Now let's come to a scenario where original invoice was rejected. So that means the amendment which has now come into picture has the 80 rupees net value as the credit eligible to the recipient. If he accepts it, he will get only 80. If he rejects it, he will still not get anything, and the reduction in liability is still allowed for the supplier. So in this situation, even though there is a downward amendment, that means reduction of liability at the supplier end, because there is no ITC impact on the recipient's end, they have given the pending option, and they have also not provided a plus delta. That means liability which is getting added back to the supplier because there is no impact on the ITC of the recipient. Hope I am clear till here. Divya, I am audible, right? I am asking a little late. I have spoken for 20 minutes.
You're audible, sir. You're audible.
Yeah. So next we have the concept of credit note. Credit note also has similar concept where there is no option of keeping pending because this is a situation again which reduces the liability of the supplier, and therefore it also requires that the recipient's credit is reduced. So to this extent, whenever it is accepted, both sides, the liability and the ITC is reduced. Whenever it is rejected, the liability of the supplier is added back in the next month because in the previous month it was reduced. Now these are plain vanilla transactions. We will come to some certain permutation combinations of the transactions. I will come to that. I am just explaining this is come out in the draft manual for the IMS. I am explaining the same. Next, we have the credit note upward and the credit note downward amendments of the IMS records. So first and foremost, credit note upward indicates that we are further reducing the liability of the supplier, and to that extent ITC is further to be reduced by the recipient. And again, to this extent, there is only accept, reject, and pending function is not allowed. So in the accept, let us understand original credit note. Let us say again, let us take 100 and 20. 100 is the original credit note amount. 20 is the credit note upward amendment. So net 120 value is being reduced by the supplier in his liability, and 120 credit is supposed to be reduced by the recipient in his GSTR 3B. So if 100 was already accepted and reduced, only 20 now is further to be reduced by the supplier and the recipient. If again that is rejected, only plus delta, that means plus 20 is added back. Pending option not allowed. If the original document was rejected, later on it was accepted with the net value of 120. So full amount is being reduced as ITC and full amount is allowed as a reduction. Where even the rejection is there of the credit note upward amendment, in this situation also full amount gets added back, because 120 rupees is not allowed to be reduced by the supplier. Interestingly, in the credit note downward amendment, there is a small change. Credit note downward amendment indicates that initially you had raised credit note for 100, then you reduce the credit note value to 80. So minus 20, not plus 20. Here we have minus 20. Net value is 80 rupees of the credit note. If your original credit note of 100 was accepted, this means that already ITC already is reduced by the recipient to the extent of 100. So when a downward amendment is being done, it is as good as paying taxes to the government. And again, in this situation, they have given the pending option, because here there is no loss to the government. So whenever I'm speaking in this manner, this is what the IMS module is providing or proposing. Do I accept this? 100% I do not accept this. It should be both ways. If you are going to take away my credit, you should also be giving me the option of reducing my liability whenever even my invoices are rejected. So they are only going in one way. They are only safeguarding the government's interests. Taxpayers' interests, as usual, have been left down in the doldrums. So in the reject option, in the credit note downward, delta is the difference. So delta is the variance between the original record and the final record. So say you have a credit note of 80 rupees, but while filing the GSTR1, you filed the credit note with 100 rupees. After that, you needed to do a credit note amendment for the value of 20 rupees to ensure you get a net value of 80. So delta is the differential, that is 20, that you will be putting in the amendment. So this is the concept of delta. When you are going for a reject option on the initial record, that means 100 rupees was rejected. This means the entire liability was already added back to the supplier. Later on, you have accepted the full amount, that is 80 rupees credit note. So to that extent, 80 rupees is allowed to be reduced by the supplier. If the recipient rejects even the 80 rupees, again 80 rupees gets added back. In this scenario, again, there is no pending option which is available for the credit notes. Now we come to the concept of document change impact. This slide has those situations where an invoice is changed from RCM to FCM or FCM to RCM. The reason they have provided this in the draft manual is because FCM transactions will display in the IMS, but RCM transactions do not come into IMS module at all. If a supplier uploads an entry against your GST number and he puts RCM yes instead of no in the column, you will not see that document in your IMS module at all. It will go directly to your GSTR 2B, wherein you will have to see from there the RCM transactions and then discharge whatever is applicable to you. Department's position now here, if you see based on this slide and if we are seeing the past notices, they are getting into the concept of if there is an RCM entry in GSTR 2B, it is a liability. Whether it is correct or not, whether vendor has filed correctly or not is not being verified. They are directly verifying your GSTR 3B RCM payments versus the RCM which is disclosed in the 2B. Additionally, there is one more concept which arises, which is in relation to the GSTR1 not being filed by many of the RCM suppliers. This is actually helping a lot of the businessmen to evade taxes also to that extent. And yes, this is called evasion because RCM liability remains irrespective whether he files his GSTR1 or not. Coming to the slide, we have RCM to FCM. RCM to FCM, whenever a document is being changed, originally there was no option to take action. When the amendment is made from RCM to FCM in the GSTR1, again it follows the same suit of taking the action in the IMS module. Similarly to credit note, if you are changing the RCM credit note to FCM credit note, the option again is available to the credit note where pending again is not allowed. Wherever you are accepting the credit note, then the liability adds back wherever it is rejected. In the situation where FCM to RCM is changing, in this situation, the document may have already been accepted, rejected, or kept pending, but later it is being moved into RCM. At that time, directly it will go into your GSTR 3B, where the liability will be available. So the plus and minus is in relation to invoice and the credit note. So this is the summary of the actions which are there based on the IMS modules. So Muniraju sir, I have a hypothetical scenarios, but I don't have with numbers. So the issue with the numbers is we cannot show both actions on the same slide at the same time. I am coming out with an article which has the point of view of supplier and point of view of the recipients for various scenarios. So I will maybe after this we will also share the link of the article to all the persons. I am going to also discuss on basics of what IMS is and how IMS will function. So if you are seeing in this place, wherever you are rejecting, which are the scenarios which leads to supplier liability also has been clarified. Now we will come into certain live issues also which are there. First and foremost, QRMP filers. QRMP filers are your quarterly filers who are filing IFF facility, and GSTR1 is being filed only on a quarterly basis. As per the manual and the FAQs, these QRMP filer details will appear in the IMS only on a quarterly basis. This impacts the business of QRMP filers to a large extent. So whoever is having QRMP registration, I do suggest to shift to regular registration to avoid any delays in payment by the recipient. Suppliers who are not able to see the records because their GST portal. Even for rejection of RCM invoices, it is not constitutional. It is something that has to be disputed, especially where it is not your invoice or not your RCM liability. Ineligible ITC. This is something where we have seen a lot of discussion on the uh, professional forums. In the future, there is discussion that even though it is B2B entity, we will ask the vendor not to put the GST number wherever the credit is not eligible, so that I don't need to get into this IMS and GSTR to be processed at all. I will not even bring it into my returns. This could lead to some difficulties because department's intention is to get the revenue out of this ineligible ITC. That was the main reason they brought in table 4B1 and made a temporary and permanent disclosure mechanism in the GSTR 3B. Therefore, taking the route of suggesting vendors to give an invoice without GSTN may not be acceptable. You may still face some kind of disputes from the department. There is a 50,000 penalty which can arise. And if you see the Suvarna Fibrotech Madras High Court decision, that says that this section 125 penalty can also be applied per instance. Per instance could be taken to be per return, and that becomes 6 lakhs per annum penalty, which is quite high. So this is again an option which is not suggested. There is an open issue which is in relation to GSTR 3B format. If a person uses the keep pending option in the GST in the IMS module, what is the use of having this ECRRS? I will not have anything to put in temporary reversals. I'll just keep pending in the IMS portal, and whenever I want, I will accept it whenever it is my fully eligible credit. So maybe in the future, they may also do away with the 4B2 temporary reversals. But of course, it has some utilities in relation to Rule 42, 43 related credits, which you may keep as temporary reversals. It may also have Rule 37 related 180 days temporary reversals, which may fit under that heading. Next is what happens if a customer inadvertently rejects credit note or invoice. So say a recipient has received invoice or received a credit note, and he has incorrectly made this action of rejecting them. Can we restore them to IMS? Presently, there is no option of the same. Next, we have the supplier credit notes, which is the impact which is there in respect to the IMS. We have discussed that the liability does get additionally in the FAQs. They have also said that you can accept the credit note and make manual adjustments in the return, so that the supplier credit also liability is not impacted. They gave this option actually in relation to the point number 3, which is there, that is ineligible ITC related credit note. So this is a situation where original invoice, let us take same example as insurance. Insurance related ITC has been accepted and then shifted to permanent reversals, say of 100 rupees. Credit note which is there has come for 20 rupees. But if I accept this, I have to reduce my ITC again by 20, which is not correct because I've already reversed 100 rupees of the credit. So to this extent, they have said that you can accept the credit note and manually reverse the impact in your returns. And this is given in the FAQs issued by CBIC. Wherever there is a value mismatch or you are unclear of the action or the ITC which is there, keep pending, communicate with the vendor. You can also use the communication with taxpayer option which is there available in the GST portal. Please keep in mind, whenever you are displaying this option of the IMS details in the communication with taxpayer, mention the document reference and your own details clearly so that you can have a separate of the GST portal communication with these persons. Use this communication with taxpayer option in the GST portal only when you do not know who this vendor is, if it is not one of your own vendors, where you do not have the contact details, you can use this option. GSTR 3B has been affected, which month IMS and 2B it has been taken action on, what action was taken, what adjustment were done. These are things which can be maintained only with respect to the modifications that you have performed. We are not telling that all the adjustments, all the actions to be considered, only those adjustments, corrections, especially something like where you have done a manual correction to the 3B to offset the error which has come out in the IMS. Whether amended invoices will display in the IMS portal as a gross figure or net figure. That means, will it show as the delta, which is 20, or will it show as net, which is 80? So this is something, again, we are waiting to see how it will display. There is a discussion again in professional forums of using GSTR 1A as the return after filing the GSTR 1. So before filing 3B, based on the action taken by my recipient, wherever he has especially rejected credit notes, I will file GSTR 1A to rectify those actions, and this will ensure that my GSTR 3B liability is not added back. Please keep in mind, whenever you are using GSTR 1A, the action which you are correcting will have the same impact in the future also. Departments would still be able to question the same. And whenever you're adding something in GSTR 1A, it comes for action to the recipient only in the next month. So these kind of ripple effects of using GSTR 1A has to be understood. In my personal view, we can avoid using GSTR 1A. Any action to be taken by recipient, directly take it in the GSTR 3B. Action of supplier also, in my view, take it in next GSTR 1 or the GSTR 3B directly. Next, we come to the representations that are required with respect to the e-invoicing provisions. First and foremost, we have legality of the finance bill itself, which is already put into the live environment. This can be disputed. Legality of IMS mechanism where tax incidence is not passed on. Let us take a very simple scenario. Invoice is raised. After that, the supplier realized that this invoice is not raised correctly. He has raised a credit note against it because he is under the e-invoicing provisions. So in this situation, he has raised the invoice and the credit note both in the same month. There is no concept of documentation on the side of the recipient because he will not accept that invoice and therefore he will not accept that credit note also. So in this situation, credit note and this invoice, in my view, it is suggested not to do it at all. Even though it is there in the books has credit note and an invoice against it. E-invoice also has a credit note and invoice against it. But GSTR 1, these documents will be removed from the records. Only the fresh correct invoice will display in GSTR 1, which will then go to his IMS for his action. This is a very simple and easy way to reduce the actions which are being taken by the recipient. And in this case, we can prove that tax incidence is not passed on because such invoice would not have been documented by the recipient at all. Next, we have legality of the finance bill with respect to liability which is added back to supplier on B2B and debit note. So wherever there are downward amendments, as we discussed earlier, there was a possibility that the liability gets added back to the supplier if it is rejected by the recipient. If we are seeing section 34, section 34 deals with only credit notes. It does not deal with B2B or debit note amendments. So to this extent, whether the IMS can go beyond the law and also add back liability in these scenarios of B2B and debit note downward amendments, this is again something that can be questioned. Next, we have invoices which are incorrectly accepted in the IMS. but ITC is not claimed in the GSTR 3B. Let us take a scenario. I have accepted the credit in the IMS and I have pushed it to GSTR 2B. In this, once it is coming in 3B, I am further pushing it into my table 4B2. So 4A5 I am claiming the credit. 4B2 temporary reversal I am doing. Net 4C, there is no credit which has been claimed in the GSTR 3B. But actually this is not an invoice which is relating to me at all. I don't know which invoice this is. I left, I did not take any action. It went into my 2B and now it is there in my temporary reversals. Now the department, when it is being questioned by the supplier, that now the supplier cannot raise a credit note, because if he raise credit note, it will get rejected. This person will tell this is not relating to me at all, and he will, recipient will reject the credit note. Now he will have to do a manual adjustment of the liability directly in his 3B, and he will be questioned about this direct adjustment because the 3B will be lower than his GSTR 1. To this extent, can he take a declaration from the recipient telling that he has made an incorrect action in the IMS? Therefore, he has, due to his error which he has made, it has not led to a credit claim. Even though he accepted in IMS, he is not taken effect in the GSTR 3B as ITC claimed in table 4C. So to this extent, is he able to give a declaration? Will that satisfy the GST officers that, okay, the supplier can reduce his liability to this extent? So this is one of the major reasons of any error made by the supplier in the first instance of putting the wrong GST number, or subsequently error done even by the recipient incorrectly accepted, will that lead to further difficulties in the business practical scenarios? This is a very real possibility. So this is something which also requires that there should be a restore option where they can amend their actions taken in the past IMS. How they are going to implement this again would be very difficult and controversial. Next, we have where original invoice and credit note both are rejected. So this is a similar scenario to where the tax incidence is not passed on, but this is a situation where the GST, the IMS module had these documents. It came to the recipient for his action, and both invoices say invoice raised in month 1, credit note raised in month 2. In these situations, it is where even invoice was rejected and even credit note is rejected. This means that credit was not taken originally, and then the ITC was therefore not required to be reversed. So in these situations, in the present day, if you are seeing the IMS module, you will get a liability add back even though invoice was rejected. Again, to this extent, because tax incidence is not passed on, they should not be giving a liability add back to the supplier. So again here, will the IMS module have an option to display of whether tax incidence is passed on or not while filing the credit note? This is something which ideally they should make available while filing the GSTR 1 itself by the supplier. Alternatively, it should be available in the IMS module. Next, we have credit notes which are received from supplier, but it is not yet reflecting in the GSTR 2B. That means physical credit note is received. Even probably the goods which are returned also are received along with the physical credit note, but he has not uploaded in his GSTR 1. Ideally, as the recipient is supposed to reverse his credit, to this extent, he should do so immediately to avoid an interest cost. But if he does a ITC reversal in month 1, then in month 2, once the credit note is uploaded by the supplier, at that time, if I reject it, he gets the liability again added back. So these kind of scenarios are not addressed in the IMS module. Anyone who wants to speak, we will take it at the end of the session. I will keep about 20 minutes for Q&A itself. Next, we have IMS, which is applicable to SEZ entities or deemed export. First and foremost, where it is for authorized operations under LUT, where it is without payment, the IMS module itself should not be applicable. Second thing, wherever it is with payment, but for authorized operations, it must first be identified who is going for the refund. Where the supplier is going for the refund, as there is no tax incidence passed on, the tax is paid by the supplier himself, there should not be an IMS module for such transactions. Where the SEZ entity is going for the refund, in those situations, then IMS module should be mandated. For non-authorized operations, it is a taxable transaction and IMS module would be similar to any other normal transaction. In relation to deemed exports, again, wherever supplier is going for refund, the IMS module should not be applicable. So considering all these things, will there be a change in the GSTR 3B due date? Personally, I feel, of course, how the department is working, how the CBSE is working, they are more into the concept of revenue augmentation, not taxpayer easement or appeasement. And to that extent, I do not think there will be an extension in the due date. But keeping in mind the application of IMS and then the GSTR 2B, bifurcating it between permanent and temporary reversals, and also keeping in mind the past transactions, I think there is a need for a possible extension and also probably an amnesty period where any actions which are taken do not lead to notices for the suppliers. So these are some of the actions which representations which were there and suggestions which is required in the present days. First and foremost, avoid QRMP vendors because the credit would come on a delayed basis. And in relation to liability being added back to a supplier, what are the precautions that can be taken? That you are going to upload this in the GSTR 1 and get his consent. Next is whatever document, final document is there, who would raise the final document needs to be understood. Especially in case of credit note, whether supplier will raise credit note, whether customer will raise debit note or invoice, this has to be discussed between the two, supplier and customer, and it should be clarified and fixed so that the transaction flow is clear and smooth. Wherever customer raises invoice, it is as good as a invoice which is coming in, purchase invoice for the supplier. Both supplier and recipient become supplier and recipient in these scenarios. Next, while you are filing GSTR 1, avoid errors while filing GSTR 1, match it with books, ensure system is linked with the invoice module. E-invoice will directly take all the transactions to the GST returns. Wherever you have B2C and other transactions, you are not providing invoice level details, so there is no issues at all. So please ensure technology is implemented within the entities for filing returns. Ensure e-invoice is raised for both credit note and debit note, and disclosures in GSTR 1 to be made after customer confirmation for these upward downward amendments credit notes, whichever are leading to liability to the supplier. So before I come to illustrations, I will take whatever we have in the chat. Yeah, so the article will come out probably in the next 1 or 2 weeks. It will be hosted through a Chartered Accountants Association. So once that is done, I will be posting the article. We can discuss the same. If the invoices and credit note are issued in different month and incidence of tax is not passed on to recipient, then what are the action points from supplier standpoint? So the situation here would be that month 1 invoice is raised. Let us take a scenario where invoice was accepted, that means credit was claimed. And in month 2, credit note was raised, and at that time the credit note was not accepted. So to this extent, the incidence of tax is passed on, then the liability will get added back to the supplier. So the scenario of incidence of tax not being passed on is when the original invoice also the credit was not claimed. It was rejected. So when original invoice was rejected, then credit note was read. The credit note also was rejected. This is a situation where incidence of tax is not passed on. Once incidence of tax is not passed on, the section 34 requirement that requires me to satisfy the incidence of tax, I would not need to satisfy that because I have not collected any taxes from that person and remitted to the government. It was an error invoice, and negating that invoice was through this credit note. So to this extent, the action point from supplier end would be that once the credit note is rejected, his liability will be added back. And to this extent, he has one option directly in his upcoming GSTR 3B. Whatever was reduced, he will, whatever was added back, he will reduce again in the GSTR 3B. Once he files as such, he may get a notice or a information asking for clarity of this adjustment which was being made. At that time, the documentary supportings must be provided. And how will you verify whether your original invoice was rejected? You need to go to your IMS outward module. In the outward, you will have the action taken by the recipient. So in that situation, reject would be there on the original invoice. You need to keep that document as your record and provide it to the department saying that original invoice also was rejected. Therefore, this credit note is only reducing that. Alternatively, in the next month, you put it in your B2C as a reduction, as a negative value, and in your 3B automatically you reduce that value to match it with GSTR1. So these are your action points from the supplier standpoint. I hope that is clear, Mr. Ranjit. Next, we have in GSTR 1A, do we need to mention net value between invoice we had given in GSTR 1 and correct invoice value, or correct invoice value like example invoice value in GSTR? Begum, can you please redo your question? I'm not able to understand. So I think you're asking whether you need to show the amended value of 120 or should we show only 20? If you are doing an amendment to an invoice, you need to put the revised figure. So you need to put 120 and only 20 will get added to your GSTR 3B because you have amended the original record of 100. But you need to put it in the correct manner while filing the GST returns. Wherever you are modifying an original entry directly, then that would be a direct value adjustment. But if in this case, what you're saying GSTR 1A, I think you'll be doing an amendment. If you are adding another invoice, so say you have raised invoice number 1 of 100, then you're raising invoice number 2 or you're raising debit note for that, that will be only 20 rupees. But if you're doing B2BA, you will be giving a 120 rupee value of the entire document, which will overwrite the original document from 100 to 120. If customer rejects the credit note, how to find out in GSTR 3B or IMS? So like I mentioned earlier, there is an option to this, which is there. If you go to GST portal, you log in, you have the dashboard, returns, IMS dashboard. In that you have inward supplies and you have outward supplies. If you click on outward supplies, you will be displayed this database, that is financial year and return period. Into IMS, they will go directly to your GSTR 2B. The reason being you are paying taxes directly to the Government of India, Customs Authority. and therefore there is no concept of accept or reject which is required. You have already paid taxes. The only thing is whether you are going to claim that credit or not, where it is whether it's eligible or not. That comes only in GSTR 3B. So IGST on ITC on import of goods will go directly to GSTR 2B. Import of services, because there is no GST number on the supplier end because it is outside India. To this extent, there is no concept of IMS again. You will not get it even in the GSTR 2B. You will have to directly put these records or RCM liability in the GSTR 3B. To that extent, ISD also will not come into IMS. ISD will go directly to GSTR 2B. Second thing is in relation to NRTP and NRTP transactions, because these are persons who will come into India only on a casual basis and then go back. They again do not require to have IMS mandated. So I think I will just see if I have. Okay, I will share the list of documents which do not require the IMS, which do not have mandated IMS functionality. I will share that to you as part of this PPT itself. Both the credit note rejected original as well as amendment, how to reduce liability. So I think Ms. Annapurna I have given along with Mr. Ranjit the same. Have to take direct action in 3B, which may warrant some departmental response. Alternatively, you have to make a manual adjustment in your GSTR 1, which will then reduce your liability in GSTR 3B. One additional suggestion in these situations is, because this is the nascent introduction of this IMS module, especially that IMS is not even valid in law, but already these actions need to be taken in the returns. It is always suggested to make a suo motu declaration to the department telling that you have done this and giving a clear reason that IMS is not legal, and therefore whatever actions have been passed because of the IMS module in the GST environment, you are reversing that action which has been taken by doing this manual addition to your GSTR 1 and 3B. So whatever you are reducing, you can give a clear response saying that this is the action that I have taken, so that in the future it does not become misrepresentation or withholding information, and you are a suo motu and you are a bona fide assessee and you have provided all the information. It's always suggested to make a suo motu declaration in these situations. Do we have to do this RICO every month before filing 3B? Yes, you will have to do this RICO every month. It is before you get your GSTR 2B. The concept of this document, IMS, is that it leads to GSTR 2B. Based on action taken in IMS, you will get a revised GSTR 2B, which you will then have to work upon to update the details in the GSTR 3B. So in addition to IMS, which you will have to see on the past period and present period, you will also have to see similarly for GSTR 2B. But down the months, if you go, say 6 months into IMS or say 1 year into IMS introduction, ideally you will not have too many changes that you will have to implement once you have taken action in the IMS. The only requirement would be to bifurcate between eligible and ineligible credit in the GSTR 3B. Yeah, so there was some discussion by the department on locking the auto-populated figures in the GSTR 3B. So to this extent, let me be very clear. GSTR 1 and 3B, presently there is no specific locking. And even if it is locked, what I mentioned was you make a adjustment in B2C in GSTR 1. Once you do an adjustment in B2C, automatically it will lock the 3B. You have already reduced the liability in GSTR 1, therefore your 3B liability also gets reduced. So you can also overcome the auto locking feature by making correction in GSTR 1 instead of 3B. If supplier invoice is kept pending, what will happen? There is no action which will happen on these transactions. What will happen specifically is that invoice will not flow through to GSTR 2B, and therefore you will not be eligible to take that credit in your GSTR 3B for that month. So basically, when you keep an invoice pending, you are deferring the credit which is eligible to you. The option to keep pending should ideally be used whenever there is lack of clarity of the details in the invoice. There is some variance with the physical invoice you have received, or you have not received the goods, you have not received the invoice, it is there only in the GSTR 2B, it's there only in the IMS, sorry, and therefore you do not know what action to take. You are not clear whether it's your expense or not. Therefore, you keep it pending and you wait. Please explain IGST input on import. So import of goods is not part of IMS module at all. It is something which you will directly pay the taxes to the customs authority through the IceGate portal, and that will flow directly into your GSTR 2B. IMS actions, whatever you take, will go into GSTR 2B. Therefore, in relation to import of goods, there is no intermediary IMS module in between. Directly from IceGate, it will go into your GSTR 2B, and based on that, you can fill your GSTR 3B. If credit is appearing in IMS and not related to the entity, then what are the actions for the recipient? Okay, so this is a situation where an entry is there in IMS, and this is a transaction which has no rhyme or reason or relevance to that recipient. In these situations, the recipient can reject these transactions. You can avoid accepting them and showing it in permanent ineligible. You can reject it and make a communication with that taxpayer that this invoice does not pertain to me. Please keep in mind, because it's an invoice, the supplier's liability does not go away. He will still have to pay those taxes. But from your end, you do not need to disclose these as ineligible credit because they are not your credits itself in the first place. Alternatively, you do not want to take any action with respect to IMS because it's not legal yet. You can accept such invoices. That means all the transactions will be deemed accepted in the IMS. Whatever comes into 2B, then you take your action. Whichever is not related to you, which you are clear is not going to be your expense at all in the future also, directly you can put in permanent reversal. Wherever you are not sure about the expense, put them in temporary and communicate with the vendor, get clarity on the transaction, then either you reclaim it and put it in your permanent ineligible credit where it is not an eligible credit. Where it is eligible credit, you put it in your 4A5, that is your all other ITC, and also you disclose in 4D1. Yes, you need to do IMS on monthly basis. Both the credit note rejected, original as well as amendment, how to reduce liability. Can you please explain what is the original credit note is rejected and then amendment also is rejected? Credit note amendment is rejected. Is that what you mean? Annapurna, can you please give some clarity to your question? Pending invoices of current month will be carried forward till 30th November of the subsequent year. Yes, it seems to be so, but I am not sure how this is going to work. There is no clarity on how the IMS is going to function until when you can keep pending the invoices. Ideally, you will be able to keep it pending till 30th November. Please keep one thing in clear. IMS is an additional functionality. The other provisions in the GST law are not modified. That means the time limit of 30th November still exists. GSTR 2B still exists. Return filing in the prescribed manner still exists. This is only an additional functionality. Is there any validity of timeline to be action? Yes, I just answered that. Is there any chance to modify the rejection option after rejecting? Yes, there is a chance, but before you file GSTR 3B. So please keep in mind, once you reject an invoice and later you want to accept or you want to keep pending, you can do so. You have to do it before you file your 3B. Once you make the change in the action taken, you have to click on the recompute button, and then your 2B will again change. Based on that, you again have to change your disclosure in GSTR 3B, and then you'll be able to file your returns. Once you have filed 3B, I do not see any option presently to modify the action taken in the IMS. IMS system, when it will mandate, I am not sure. Even though the finance bill is made into Finance Act, we still require two sets of notification. One set of notification which brings these clauses into effect from the Finance Act. Another set of notifications which are the rules which will prescribe the methodology of implementing the IMS module. After that, I am also sure they will come out with a circular similar to Circular 170 or the GSTR 3B, how they came. Similarly, they may come up with the IMS module also. IMS ticking made mandatory to avail input credit. You do not need to tick if it is your eligible credit. You can leave it as is. No action is also deemed acceptance. You need to only action on reject and pending. Where do we find rejected invoices by our supplier? Supplier does not take any action, only recipient takes action. Rejected invoices of the recipient, you can see it in your IMS module. Go to dashboards, returns, IMS, and in that you have to go to outward supplies. Within that specific month, you can see the rejected documents. Yes, Mr. Vishwanath, where the record count is more than 500, there is no option to identify the documents which are rejected. It is not downloading presently. If you are having this grievance and you have some liability which is added back, I do suggest you raise a grievance. Also write to your jurisdictional officer of the difficulty that you are facing. Again, part of the representations which I have mentioned. Now, point number 1 is the legality of finance bill, which is put into the live environment. We haven't taken any action in the IMS till date. 3B filed monthly basis based on ITC available on 2B. No, you do not need to take any action on IMS. Wait for the department or the CBIC to make it valid. Let them come out with these notifications which we are awaiting. Yes, no action in IMS is deemed accepted. So basically, till date, if you consider the period prior to October 24, before this IMS came into picture, you were having all the documents which was going directly into the GSTR 2B. Presently, if you do not take any action in your IMS portal, the data will flow directly into GSTR 2B. So it is the same status. Process. So this is something where there is no hard and fast rule that because they have implemented in live portal, it is mandatory that you need to start working on the IMS module. They have also told it's the optional process. The reason they have provided it in the portal is to get yourself acquainted with the changes which they may be implementing. That is the only requirement. I suggest not to take any action in IMS. Wait for the provisions to be made mandatory. Even in the past, they came out with annexure 1, 2, 3, which they never implemented. They did a whole lot of work on it, but finally it was scrapped, and then they introduced after a fair bit of delay GSTR 2B. So let us wait and watch. Let them bring it into the legal principles. After that, we can start implementing. But you can always have a look as to what the IMS is, how it is working. Do not say that because it is not there yet mandatory, I will not see how it is functioning. I think Mr. Sunil Kumar, you can email me separately because import ITC is not linked to this session at all. It is not coming into IMS. We can discuss it separately. My email will be displayed at in the last slide. You can share me an email on your issue. Mr. Yogesha, I don't think there is any extension in due dates. What I mentioned was it is a possible representation to the CBIC and GSTN to extend due date if they are going to also add burden to the taxpayers. So that is something that you should do as a taxpayer. That is something, if you are a consultant, you should suggest your clients to do, because industries associations have a stronger voice than our CA fraternity. No time limit prescribed as of now. Ideally, we will have to follow section 16.4 timelines for the invoices and debit notes. So let us come to one of the situations which we have discussed. Tax invoice is raised but rejected by customer. Now customer requires a fresh invoice. So to this extent, invoice is disclosed in the wrong GST. Instead of putting GST number A, I put GST number B. So to correct this, I will raise a credit note for cancelling invoice which is raised to GSTN B, and then I'll raise fresh invoice to GSTN A. So what will happen in GSTR 1? You'll have two invoices and one credit note. So what we were suggesting, at least I was personally suggesting in this return, is in your books and in invoice portal, let there be all the three documents. But in your GSTR 1, raise only the fresh invoice. Whatever is auto-populating the incorrect invoice and the credit note, remove them from your GSTR 1 because it does not pertain to that person. He is going to reject both the documents, and because there's no concept of verifying tax incidents in the IMS portal, the rejected credit note will add back the liability, which will create a lot of difficulty for the supplier. So this is one of the options. And to this extent, because you have made a manual modification in GSTR 1, please ensure you are maintaining the reconciliation between your e-invoice sales registers and your GST returns. Ineligible credits, do not reject in the GSTR, in the IMS, accept it and then put it under 4B1, where you are not sure whether it's eligible or ineligible credit at that time. Park it in temporary reversal, but accept it in the IMS portal and then take the action in the returns. Avoid using the concept of pending or the rejecting these invoices, because then you will not be able to disclose in your GSTR 3B. So some of the impacts of the IMS implementation. First of all, I will repeat again, IMS is available in portal, but it is a optional facility. So this is not valid in the eyes of law. It would be mandatory in the future is what we are expecting. Next, supplier view. To understand actions which are taken by recipient, specifically those actions which are adding back liability, are separately also provided. Action which is taken in IMS before GSTR 1 filing. That means if a person is taking action, say on 5th, 6th or 7th of the month, that means the recipient is going to IMS module and accepting or rejecting. At that time, if the supplier finally, when he files GSTR 1, he modifies those invoices, whatever actions taken are reset. You will have to retake those actions. So to avoid double work, I always suggest take your IMS actions only after GSTR 1 is filed. But take it whenever I'm telling take action, I am suggesting once it is mandatory. I am not suggesting right now. Recipients can modify their actions using the IMS facility before filing of GSTR 3B. So to this extent, once you make any action, say you have done accept, reject, you want to change accept to pending, you want to change reject to accept, you can go and make the change before you file your GSTR 3B. Once you do the change in IMS, please ensure you put recompute. Your 2B data which will come will change, and then you have to change your 3B disclosure. So please keep this also in mind. Excel summary download option is not available in the functionality yet. So this is yet to come. But if you are facing challenges in this, raise grievance and you can make the representation. There is no option for the recipients to add any invoices in the IMS. Earlier, when there was GSTR 1, 2, 3 in the inception of GST, there was an option which was suggested to add invoices by the recipient. Till date, such an option has not been made available in the portal. Does IMS have effect on GSTR 2A? So I have not seen with respect to GSTR 2A because ITC claim is linked to only GSTR 2B. Section 16(2)AA links to section 61, 65. All these, rule 61, 65. All these provisions are linked to GSTR 2B only. The requirement to do matching also is required to be done with GSTR 2B and not 2A. And they brought in GSTR 2B in January 2022 to overcome the difficulties of GSTR 2A. So in my view, discussing on GSTR 2A is not required. We need to see GSTR 2B because that is linked to your IMS. We couldn't find rejection tab in IMS outward column. So I will again display that slide. So if you see this dashboard returns IMS dashboard outward supplies, not inward supplies. In outward supplies, there is this rejected records. But if you are not able to find this, again, please raise the grievance and speak with the jurisdictional officer to provide these details. They are at the end of the day representing the CBIC, and if they are making something live in the environment, they are also looking at feedback from the taxpayers. What is working, what is not working, what are the difficulties being faced. These are things that department also may take in the as a good feedback to make the corrections now. So please do raise your voice and inform the relevant authorities. So to conclude, how can we have this implementation on a day-to-day basis if we are seeing? So in the subsequent month, before the GSTR 1 due date, between the dates of 5th to 8th, for your own outward supplies as a supplier, you reconcile all your credit notes and amendments which will lead to reduction of liability, B2B amendment downward, debit note amendment downward, credit note amendment upward. All these situations, please reconcile and see if you have any such scenarios in that month. If you do have, communicate with the customer, get his approval, and then only file in your confirmation from the recipient. 11th to 13th, do not take any action in the IMS until GSTR 1 is filed by the recipient. Why I have mentioned 13th? 13th is your due date for quarterly filers. So for quarter ending, you can see 13th month and then only take action. If you are having quarterly filers, if you don't have quarterly filers, keep 11th as your date. Take action only after 11th. So 12th onwards, you can start your taking action. 14th by 14th or 15th, download all IMS entries, reconcile with your books of accounts, current month plus previous month pending items. Please keep in mind when I'm saying this, the same concept which you are doing for GSTR 2B, you have to do directly first in IMS. Once you do that, the action which you take will then move into your GSTR 2B, and only that much amount of credit you can action upon in the GSTR 3B. If you want to make any changes, make changes before filing 3B, and wherever you are not taking action, or understand that it will be deemed accepted. Use the reject function very carefully and do not get into errors. If you are having for the introductory period, please ensure you have a maker checker policy for the actions which are being taken. Do not implement without understanding the act rules or regulations which are being provided. And if you want to have a little more clarity on IMS, you can go through the link which I have given in the first slide, which gives the FAQs and the advisories in relation to the IMS. Let us wait for the IMS module to be implemented, and then we can take it forward. About 1 or 2 days, and then I will share it with you. Divya, you will ensure that it is shared, right?